Hey, good morning, everyone. Jack McGrath with NakedTrader.com. Well, it's Monday morning. The market has fought back to pretty much unchanged on the day. We were down a little bit early on before the open outcry. But I think you got to be very cautious about getting caught short here. After Friday's trade, the market bounced at the end of the day. 10-year looks like it had a little spike bottom, finishes in the upper end of the range on Friday, kind of holding in here this morning. That 16 area is where that trend line had come in before. I think you do have some resistance there, but it looks to me there's a lot of signs that are telling us that you have to have be very cautious about being short right now. You'd be looking for a correction of some kind higher, and then maybe you'd be looking at buying some puts or selling the futures. Right now, I just think you got to be very cautious about getting short at these levels. One of the reasons why, if you look at Eurodollars, the spreads have all widened out pretty dramatically. It looks like they're getting into overbought areas, specifically the SEP-DIS. If you looked at that, the old high was 20. We're trading this 19.5 area right now. Yes, you do have 22.5 and 24.5 above there as resistance. I'd be looking at selling right here, building a little short position, stopping above 24.5 if it started to take that level out. Otherwise, looking for a correction back down. 11 was the last low that we saw. So I would be looking for SEP-DIS to come back down towards that level. We have seen some call liquidation here in September over the past few sessions. On Friday, SEP-93 calls down another 25,000. The 97 calls down 14,000. And the 98 calls, I believe, were down like 5,000. Late day buyers in the May 97 calls, they traded for 1 basis point, up 12,000 open interest. We also saw buying 1 1/4s in the June 97 calls and buying in futures in June and SEP. All day in June, paper was in buying. It probably traded 50,000 contracts. Late day buying in SEP as well. Traded 15 to 20,000 late in the session. Open interest in both of those contracts increased 14 and 15,000. So I don't really like being short the market. I'd actually look at some short June calls or short May calls. The 90 calls in short May gives you a month of time. You could pay 3 to 3.5 basis points for those, or try to do the 90-92 call spread. Something where you're not risking a lot of premium, but if the market did start to take off, like if you look at the red June contract, I think the range there is 69 to 77 for short term. You start to take out 77, you look for a trade 10 basis points higher, 85.5, 86 up level is kind of where you find the next level of resistance. Below 69, you'd probably be looking to sell some futures at that point, looking for a trade back down again. But just things that I look at, looks like the market's getting a little bit oversold here. Just be wary of being short. And don't risk a lot. Like I said, take a shot at buying a call spread or something. Don't risk a lot of premium. Have a good day. Jack McGrath with NakedTrader.com. Thank you.